Real estate investing's better. No, dividend investment better. No, real estate investment's better. No, dividend investing's better. In today's video, we're going to start the challenge. We're going to challenge my bank-owned disaster home that we remodeled for $35,000 against a $35,000 dividend investment portfolio. Stick around. It's going to be awesome. Hey guys, welcome to Season 1, Episode 1. Today we're going to talk about January 2026. I'm pitting my bank-owned disaster home, which I bought and remodeled for $35,000 against a $35,000 high dividend investment portfolio. We're going to track everything from cash flow to dividend interest to rents to expenses. And we're going to break down over the year and see what happens. Every month, at the end of the month, I'm going to give you a recap of the previous month. We're going to see if owning a rental home and managing it is worth the hassle, or if I can make the same amount of money on a high dividend ETF or high dividend portfolio. Why not just do that? We're going to put them to the challenge. This is it. This is the dividend portfolio. I'm going to quickly go over these. This is not financial advice. Do not replicate this series. I have a lot of things here, from high yield ETFs, which have a lot of NAV erosion, but they pay out great weekly dividends, to great aristocrat dividend companies who pay dividends every 3 months. Some of these pay 6 months, but these get paid consistently. What I'm trying to do, again, is I'm matching that rent. My rent on that house is $750 a month, so I'm going to try to get there. The first couple of months, it may seem a little unfair, but as I reinvest the dividends, you'll see over time how well the dividends help grow the portfolio. $35,332.14 portfolio. This is up against the bank-owned disaster home that we remodeled. Do not copy this trade by trade. This is probably terrible investing advice, but this is what I'm doing to match. So there's a lot of high dividend, high yield, high NAV on some of these, but again, I'm trying to match the cash flow. But then I have some real winners like SPYI. I really like this one. This is probably my favorite one out of everyone I own. I own this in a lot of my stuff, almost 12% dividend yield. QLD, JEPI, JEPQ, those are good ones too. I like those high yield max. You got to know what you're doing there. Those will erode fast, but they are high yield payouts. This one here, this is oil based. I think the oil is really undervalued right now. We'll see what happens. There's a lot of geopolitical tensions out there, a lot of manipulation with the price. It may go lower. I'm sure it will go lower over time. But one thing I like about M1 is I think they kind of really push you to be a little more finance accountable here, and not like Robinhood, where it feels almost like gambling. You can only trade one time a day. You set a portfolio, you pick your stocks, you put the percentage in the pie you want, and then you can just auto invest, and it'll try to get that percentage as close as you can. The top percentage is what I actually have allocated, and the bottom is what I'm targeting for. So some of these I've overinvested in, and some of them I'm underinvesting in. Things like this one here. This is O. It's a REIT, pays every month, 5% dividend. A lot of good companies here. It's 5% annual, by the way. A lot of good ones here. Winner. This is if you follow my other videos. This is the MSTR play. This is the short on MSTR. A lot of ETFs. A lot of dividend aristocrats. A lot of high yield. A lot of energy. Just really trying to get a really good set here of stocks. So again, we started at $35,000 at the property value and $35,004.53. Sorry, I couldn't get it to 35 even. That's close as I can get it. The insurance for the house was $888. We had $750 worth of rent come in that month, so $138 negative. So we won't have that insurance every month because it's paid annually. On the dividend side, we had $327.61. So we actually have a $327.61 income balance. As of January 31st, the dividend portfolio actually has a lead over the rental property of $465.61 due to that insurance costing me. I give it a month before we started this. We're going to track everything that comes along, but I started tracking in January, and now stick around. At the end of February, I'll post another video updating us where we are with episode 2. If you haven't, please like and subscribe so you can catch all the videos as they drop. This is going to be really interesting as it grows out. My hypothesis is that real estate will quickly overcome the dividend account of itself. I own the property free and clear, but I'm not going to refinance it and invest in another property just yet. I'm going to give some seasoning time here. I just purchased this. We just remodeled it. I want to make sure everything's good to go. In the same vein, I can use margin on the dividend account. I really don't want to use too much of that. I did use a little bit to give me this number. I'm going to pay that off and not count it in the finances here, but I'm going to get that paid off, and then I may use it in the future, but right now margin is not something I really want to use. Stick around. We'll see what February brings. We'll have more rent. We'll have more expenses. We'll have more dividends. Which one's going to win out? Like and subscribe. Comment down below. Don't miss an episode. See you next one.